Good morning, folks, and welcome back to your quick dose of market insights with me, Endrit Cela, on Capital Markets Quickie. Well, yesterday's session was a bit of a roller coaster, wasn't it? Let's dive right into what happened in the stock market yesterday and unpack some of the key takeaways. So, starting off, it wasn't the best day for U.S. stocks. We saw the Dow Jones take a dip, falling over 400 points. That's about a 1.1% drop, pushing it away from that much-anticipated 40,000 mark. Meanwhile, the Standard & Poor's 500 wasn't feeling too hot either, shedding about 0.9%. And leading the pack in declines, the Nasdaq Composite slid around 1.2%. Now, you might be wondering, what's with the bond market? It's been struggling too, folks. The yield on the 10-year Treasury crept up to about 4.36%, hitting its peak for 2024. But here's where it gets interesting. After a smashing start to 2024 with record highs left and right, the second quarter's been a bit more, let's say, challenging. Some hotter-than-expected manufacturing data, along with a sneaky increase in prices paid, has folks doubting an early rate cut from the Fed. And with the U.S. economy showing off its muscles, who can blame them? In other news, we've got the job scene looking pretty steady, according to the latest from the Bureau of Labor Statistics. Job openings in February were up a tad, and so was hiring. However, it wasn't a good day for everyone. Health insurers took a hit after U.S. regulators decided not to bump up payments for private Medicare plans as they usually do. Humana took a particularly hard fall, dropping about 14%, and CVS wasn't too far behind, losing almost 8%. And Tesla? Well, they've seen better days, tumbling more than 5% after their first quarter car deliveries didn't quite meet the mark. So, what's the takeaway here? Today was a reminder of the market's complexity and how various factors, from regulatory decisions to economic resilience, can sway investor sentiment. But as always, we're here to make sense of these moves together. That wraps up today's Capital Markets Quickie. We've got an eye on the Fed and the broader economy, and we'll be back tomorrow to break down what happens next. Have a great day, everyone. Cheerio.